Hi, Steve here with the market making all-time highs. We're getting a lot of requests. I just want to do a very quick market update, focusing in this case on the equity markets. Okay, so first we'll look at the Dow. I'm not a big component of following the Dow. I like the S&P better to gauge the overall market. Obviously, the S&P is a broader index, but I will first mention the Dow because it's what the news is focused on. The media saying, "Oh, it's over 20,000 for the first time," and so forth. So let me go through what to look for and to let us know when indeed the market might be ready to reverse or prove that it's reversed. And let's go through some of these. So here we see, let me discuss the resistance area first, and then I'll look at the recent action. So here we see a series of long upper shadows showing us right around the 19,950 area. The market's having problems. This is a gravestone doji where the open, low, and close are at or near the low of the session in a long upper shadow. And you can see how it confirmed the resistance area. And we had confirmation of the resistance here. So what was especially positive about with the recent action is it gapped, and I'll draw this line here, these lines. This was a resistance zone, and the market not only moved above it, but it formed a rising window above that. So essentially what I'd be looking for to confirm that indeed the rally is solid is any retracements must hold this zone here between, I'd say, the highs over here, right around, let's make it 20,000, and the high over here, right around 19,935. For two reasons. One, this rising window should be support based on the close. And secondly, the change of polarity, old resistance becoming support. So we have two very important reasons why this should become a resistance area. And now that we're in uncharted territory, how I would get a target is just using a box range breakout. So this is the box range, the lateral trading environment. And let's be conservative. Let's go from here to over here. So that would take us from 19,725 to 19,950. So that's 225. We had 225. Let's add it to the top of the breakout over here. So 2,000. Actually, let's make this 19. Yeah, that's close enough, right? We'll make it 2,000. So that gives us an upside target of 22.25. It doesn't mean it's going to go there right away, but again, as I just mentioned, it's important for any corrections, which would be fine. Corrections are healthy. You don't want the market to get too ahead of itself. Any corrections on a close must hold above the highs over here of 19,950 on a close. And here's the S&P. Similar scenario for those who are following the S&P. You see this old resistance area. All right. Gapped above it. This rising window, this gap should be support, as should the change of polarity. And using the same concept of a box range, we get a target from, let's say, 22. Use a low over here. Let's say 2260. And again, well, since we had a little spike here, let's use this high over here. 2280, that's 120 to 2280. Okay, gives us an upside target of 2400. And as I mentioned with the S&P, don't expect it, if it does reach that level, to go straight up. It's fine to have a little bit of correction. In fact, today we had a bear harami, a small real body and a big real body, not a major reversal signal. And the fact that the second real body is holding right around the top of the first green real body makes this less potentially negative. But nonetheless, keep an eye on this as first resistance all the way down to over here. With the market making all-time highs, you may be interested in learning more about options or Forex. And especially with Forex, it's a great way to diversify your portfolio. Check out these links for some specials and some special bonuses as well. Thank you.